Hello, chart watchers, and welcome to this Thursday, July 5th Market Watchers live show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, taking a look at the market so far today, post-holiday, we've got the Dow Jones Industrial Average up 136 points, the S&P 500 up a little more than 14, the NASDAQ up 47, and the Russell 2000 up 7. So we are seeing gains across the board. 10-year Treasury yield, though, falling back about 1 basis point, 2.83%. Volatility has moved a bit lower here, down about 5% today. Leading to the upside, really a number of sectors doing pretty well. Technology, you can see having a very strong day, along with healthcare, moving back up, trying to get through its moving averages. Consumer staples, after bouncing off its rising 20-day moving average, try and go back and retest highs we saw at the end of June. And materials, which had been under pressure, a lot of the trade talks and so forth, the tariffs really impacting a number of the material stocks, but that group is up about 0.5%. Boeing and Embraer Aircraft, ERJ, did announce a strategic partnership today, but apparently the market is saying Boeing got the best of this deal. Boeing is flat, but you can see ERJ down about 10% on the announcement. Take a look at these two companies' long-term charts. They have definitely gone in different directions. We'll look at that in just a couple minutes. But first, Erin, how was your July 4th?
I had a very nice July 4th. Actually, the night before was when I did my celebrating. So yesterday was just taking it easy. So I enjoyed my day off, taking it easy.
That kind of makes sense. I have a question here for you to ponder. Mm-hmm. How do you go fourth on the 5th if you've had a 5th on the 4th?
Oh, wow.
Oh, never mind. You don't have to answer that question. I know you didn't have a 5th on the 4th. I didn't either.
No, I did not. Not quite. No.
Yeah, I saw that.
Go that direction. But I have to tell you, because I know we do the weather now and then, but tomorrow in Corona, California, where I'm at, the high is supposed to be 114. And on Saturday, it's going to be 113.
Wow.
I know. I don't even know what that's going to feel like. I can't remember the last time I was in weather more than 110. So it should be interesting. I suppose it's like the cold. When you hit a certain point, it's just darn cold. You get to a certain point with heat, it's just darn hot.
Yeah, you just want to stay out of that for sure. We do have a special guest with us today, though, Bruce Fraser. He is joining us again, Mr. Wyckoff. Bruce, how was your 4th?
My 4th was great. My only complaint is I feel like I had a 5th on the 4th, but I didn't. That's just cruel.
Yeah, I saw that somewhere yesterday, talking about marching 4th on the 5th after a 5th on the. I thought it was kind of cool, but I don't know. That's just my crazy sense of humor, I guess. Anyhow, we're going to have a pretty special show, though, for everybody today with Bruce back. And so I'll kind of save a little bit about what's going on. I'll let Erin take over and go through to the upcoming schedule on today's agenda.
Indeed. We're already, I think, looking into next week at this point. And Tuesday, you're going to be having your workshop on some very interesting topic, I am sure. Tushar Shande is going to join us on Wednesday. And then I believe, yes, on Thursday, we have Grayson Rose coming back. So that'll be really good to see him once again. He got a lot of good comments after his last presentation. As for today, we're going to start off. Yes, Bruce is here. He's going to talk Wyckoff with us. And then we're going to do the segment Sound Off. And for those of you who remember, I know you're going to be looking forward to it. For those who don't know what it is, we'll explain it when we get there. First stock in the 10 and 10 to 1 is going to be the Joint Corporation, JYNT. And finally, we're going to finish off with some technical scans. So let's go ahead and, Tom, take it away. We got a lot to cover.
All right, sounds good. And yes, we do. Here's the 10-year Treasury yield. So far today, you can see it continues to trade beneath that declining 20-day moving average. We had a number of economic reports out this morning. I'll get to those in just a second. But, of course, tomorrow is the biggie. We've got the non-farm payrolls report coming out tomorrow morning at 8:30 Eastern. So we'll see what the latest jobs picture looks like. And, of course, that has a major impact not only on the equity market, but also on the bond market as we look at the economic picture and what to expect as we go forward. But out this morning, we had the June ADP employment report. So perhaps maybe giving us a look into what we might expect tomorrow with non-farm payrolls. The June ADP employment report, 177,000 jobs, market looking for 190,000. So we did come up just slightly short. But the May ADP employment report was revised higher by about 11,000. So we missed this month by 13,000, but the prior was revised higher by 11. So maybe, kind of a little give and take there. Initial jobless claims came out at 8:30, and they were a little higher than expected, 231,000 versus the anticipated 223,000. Then at 9:45 a.m. Eastern Standard Time, we had May PMI Services Index came in and matched estimates, 56.5. And then at 10 a.m. Eastern, the May ISM Non-Manufacturing Index was released, and it was a little bit higher than expected, 59.1 versus 58.4. So really, we had a little mixture. We had some positive economic news, some weak economic news, and at 2 o'clock in just about 2 hours from now, we're going to get the FOMC minutes. So we'll see a little bit more as far as what the Fed discussed in their last meeting. But you can tell here on the chart, the 10-year Treasury yield is falling. Back on Tuesday, we had moved higher, got up to about 2.88%. Here we are back down at 2.83%. Short term, I've been talking about just trying to get back through this 20-day moving average to the upside. Big report out tomorrow with non-farm payrolls. It has the certainly the capability of moving the Treasury yield pretty significantly in either direction. So if we get a really strong report in tomorrow, we could gap back up above this 20. But if the numbers are weaker than expected, I think this April low and perhaps the end of May low between about 272 and 276, 277 in that area is likely to come into play as well. So let's see how that how the number comes in tomorrow and go from there. Let's see what else. I mentioned Boeing and MWL. I'm not sure if I'm pronouncing that correctly, but let's take a look at both of these charts. They did announce a strategic partnership this morning, and you can see not a whole lot. The Boeing's up a little bit. It was gapped higher, and then it went back down, tested this 330 supported area, and now it's back up to 333 and change, continuing to hold. I think Boeing's got a great long-term chart. If we bring up the monthly chart, you can see, we made a huge run for about a year and a half or close to a year and a half, and I think we're just consolidating in Boeing. Maybe even we may see a pullback to test that rising 20-month EMA. Who knows? But longer term, I think the chart here is pretty clear. Boeing is a great performer. We saw a huge move back in 2013, and you can see the consolidation that took place for a while after that. Then we just had another huge run in Boeing. So I think the sideways consolidation is fine. If we pull up ERJ, however, look at this monthly chart. Stock was trading back at $45 in 2007. It's now at 23 and change. So it is roughly 50% of where it was 11 years ago. Definitely these two stocks going in different directions. And if we take a look at today's action, you can see ERJ down 10.5% on this news of this strategic partnership. Apparently, the market doesn't think it's so strategic for ERJ. We are down testing a pretty important price support level. And if we go back just a little further, I'm going to take this back 1 year instead of 6 months. And you can see that this area, we did break out above about 2375 in December of last year. And each time we've gone back to about 2350, we've been holding. So ERJ, I think, does have a pretty key area of price support that it is currently testing. One area of the market I did want to talk about, I mentioned earlier at the open that healthcare among the sectors performing really well. Let's take a look at the healthcare providers, because I think this is a group that really looks good to me. On a daily basis, you can see over the past few months, we have been moving higher, even though the overall market has been struggling. If we stretch this out and look at a weekly chart, I see a cup. First of all, we got a beautiful uptrend, but I think we've got a nice cup. We've pulled back almost to that 20-week moving average to put in a handle. A breakout above 1950 in this group would be very bullish for sure. So this is something to keep in mind. I know that the small caps small cap healthcare has been on fire. This has been one of the best areas of the market with the dollar surging. Many small caps have been doing well, none any better than the healthcare small cap healthcare ETF. This is PSCH. Just a couple of names real quick I'll go through. GEN, which is Genesis Healthcare. This is a small cap stock, healthcare stock. I think it's got pretty good support down here around 220. If it does break below or below the 50, then maybe this next support level coming in at about 180. But it's a small company, has been doing very well. You can see volume trends have been exceptional. I wouldn't be surprised to see this move higher off of this pullback, go back up and retest those highs at about 280. THC, this is Tenet Healthcare. Tenet Healthcare, negative divergence, higher prices. You can see the lower PPO. And as it was moving up, volume kept drifting lower and lower. Well, finally, we got to pull back all the way to the center line on THC on the PPO, also a 50-day test. And now it looks like we're turning a little bit higher. One stock that has not done as well, PRAH, you can see more sideways action, but I do like this bullish behavior off the rising 20-day moving average. This one has a much lower scooter, but I do like the volume on that gap up at the end of May. We continued pushing higher, went above this January high, pulled back at that rising 20, and now starting to move higher. I think PRAH looks pretty good, and I think the weekly looks pretty good as well. Yeah, we had been downtrending for a few months, but we've broken out above that on increasing volume. I expect to see higher prices on PRAH. Okay, we're going to bring Bruce in here in just a couple minutes, but before we do that, Erin, I know you've got a couple of upgrades for us.
I do indeed. We'll go through those pretty quickly. All righty. Here we go. Brookfield Infrastructure Partners. All of these are upgrades, by the way. And I've pre-marked, annotated much of them. I thought this was a pretty interesting pattern here. Of course, we've got a big move up of over almost 6% right now. So I would, of course, wait for any kind of a pullback before I would jump into this. But I think it's really interesting that we got the gap and it came in right above, just above where we were previously. You can see right here the close from back in mid-June came in. The gap came up right there. I would be watching. This is a congested consolidation area before we hit that low. I would be looking for a break above that. But like I said, I would still want to see a pullback here. But look at the PMO looking great. Of course, the scooter value is moving up. So I thought that looked pretty good. Let's look at boom, baby. All right. This one, I'm seeing the PMO obviously still in decline, but it does look like it's interested in turning back up. I'm not liking the fact that we are reaching this area of overhead resistance, and we did today, even on the upgrade, but we're turned away and moved back down. I think this one would be worth a watch list just because we do have such a strong scooter. And, you know, I think this PMO does want to turn back up. And you see, when you start to see that curl, that's usually the time you start looking for that breakout. Boom. All right, Geron, G-E-R-N. I moved this one into, I believe, a 6-month chart because I really like that you're seeing this cup starting to form, or a rounded bottom is what I look for. And you can see that came off right at some really important strong support, and we're now starting to come off of that. I like that setup. We have, I think you could set up a risk reward that would be very nice. The only thing I do warn is that this is a low price stock, so be careful with your position size because you may end up putting way more at risk than you maybe want to. And finally, we'll stop with QRVO. And this one's still in this consolidation zone, but I think there's certainly some potential for it to get back up and test the overhead resistance from the tops back in March and June. PMO has stopped its descent. It hasn't quite turned up. Volume is still not looking the way I would like it on the OBV. So I would look for that pullback in this consolidation zone, and then that could be your opportunity. You could set a stop, you know, right here just above 78 in 79 area, and then you have that upside potential towards the top over those tops at that overhead resistance. That's all I have got. I think it's time we bring in Mr. Wyckoff, as we like to call him, Bruce Fraser.
Thank you so much.
Welcome.
Those are some great looking charts. That was fun.
Yes.
So,
Well, we've
All
got
right.
a number of stocks, and just to let everybody know, Bruce, you're going to go through and give us I don't know, 15, 20 minutes of a little Wyckoff, and then we're going to move into Sound Off, where you are going to be challenging both Erin and me in that fun segment that we've done before. So I'm going to let you take it away and
well,
go through your presentation, but I'm looking forward to Sound Off.
All righty.
Well, I have to tell you that they just sprung it on me that I'm going to be in Sound Off, because I was on it before a couple of months ago, and I just kept getting cut off. So I'm going to have to learn how to tighten up my comments. Anyway, we're going to talk about a really fun thing today for me, and I hope for you, and that is that we're going to talk about intraday trading. I promised last time that we would go into that, because Wyckoff is just such a great tool for intraday traders, and I'd like everybody who does intraday trading to raise your hand so I can see what the interest is. And I can see there's a lot of people that are really into intraday trading, so that's good. So just to start, Hank's book, The 3 Skills of Top Trading, is a great book for people that are interested in Wyckoff, horizontal point figure counting, peak performance trading, all that. It's a classic. And so I encourage you to read that, and also to read the blogs. So that's all I'll say about that. We do Roman Bogomazov and I, who we both have taught for many years at Golden Gate University, do a Wednesday afternoon Wyckoff market discussion for those of you that are interested, and you can go to the website and have a look at that. And there's a free one coming up, I think, in August. So, and then what we're going to do today is we're going to talk about Wyckoff on a shorter time frames. And so all of the principles that we've talked about before, and using the schematics of price structure, are going to be part of this discussion. I'm only going to show you this. You can go get these schematics, which you should print and put up on your bulletin board. You can go back to that blog and you can print off the accumulation. And then here's where you would go to get the distribution schematics. And you'll see that there's these are going to be very important to intraday analysis and trading. And then also the reaccumulation concept is very important also, and we're going to talk about that. Now, we looked at this chart last time, and I don't want to spend time on it other than to say that we always want to think about the intraday trading from the perspective of context. And so the context here is that in January, we had a big climactic run to conclude a big uptrend, and was followed by a buying climax, followed by an automatic reaction in all of these major indexes, which set up a range-bound market. And so we've been functioning in a range-bound market now since the beginning of the year, since the end of January. And so this is the context in which we want to think about all of our trading activities. We can see here that the NASDAQ has been really strong, and also the Russell 2000 has been really strong. And I'm going to concentrate my case study analysis on the NASDAQ composite. But also you can see here the S&P and the Dow have been more range bound, and have, and this chart's about a month old. So if it doesn't look quite right to you, it's because it doesn't have the most recent data. Now here, this is a 60-minute chart, but the point I want to make is that you can do this analysis on any time frame that's of interest to you. You can do it on 5-minute, 15-minute, 30-minute, 2-hour, daily, weekly, monthly, whatever it is that interests you, you can do this analysis. And so here, as we look at the Dow Jones Industrials, you can see that at the top in June, you can see a climactic run. So here we have a climactic advance, which is followed by a correction of sorts. This is a minor climax, automatic reaction, all within the context of this 60-minute time frame, 60-minute bars. And then we have the process of building distribution, but the distribution is within an hourly parameter. So now we look at this and we see that there's a breakdown. So signs of weakness, a breakdown, last point of supply, and then the downtrend just begins in earnest. And you can see the downtrend becomes more volatile as you go down. And this is going on over the course of about a half a month. And now this chart's a couple days old, but you can see here that we're attempting to stop the decline after a selling climax. So we have selling climax, automatic rally. So you can see the principles at work here in Wyckoff show up in the intraday data. Okay, so I just want to make that point. Now, the other part, which is really important to us, is the ability to do point and figure analysis on intraday data. So you can see here, I want to make a couple of key points, is that we are using 15-minute data for the analysis of the structure that we just looked at: uptrend, distribution, downtrend. And the other thing that we do is we do scaling is average true range 20, which is the standard scaling that you can choose in the point and figure engine. It defaults to traditional, but you want to use ATR 20 for intraday. So we picked 15-minute time frame, ATR 20. This is what the chart looks like. Now we can see that there's some excellent accumulation. There's an excellent accumulation structure here, which we counted and flagged, and you can see that it did a really nice job of picking up where the trend stopped. And then at that point, you could see that one of two things is going to happen: is you're either going to form a reaccumulation for another move up, or distribution for some kind of a move down within the context of the smaller time frame. And so the point to make from this chart, and we'll look at others, is that point and figure works really, really well on intraday data. And so this is very exciting for us, because now we can look at the vertical charts, and we can look at the point and figure charts, and we can bring them together into this fantastic intraday analysis. Now, you get a little more variability on intraday point count. You can overshoot, undershoot. A little more common than is on daily. Here, you can see with this distribution that it did a really nice job of catching the this area where the market stopped. And so and then, we look to see what happens, what kind of structure gets built after that. And of course, we have to analyze that. So now here's the S&P. Let's see. Okay, let's look at this chart first. So here again this is 2-hour data that goes back to the beginning of the year. And you can see this huge correction into an automatic reaction that sets up a big range bound structure that we have been living with for months now. And as I said last time, we could be living with this for months to come. And so we have had a run up to the resistance area. This could be a giant accumulation, or reaccumulation, but let's take this in smaller bites and see if we can't manage our way through these trading ranges with intraday data. Now, the context here is that after the automatic reaction, we have a run up, and this run up is an attempt to test these highs. And then we get another sharp break, because there's a lot of supply that has emerged. These big downtrends are evidence of large supply coming from large holders that are selling stock. And this all has to be washed out before the market can go up again. If it goes up, it may just continue to go sideways or even go down. But here we can see this important turn down. This is an important resistance area. And so notice this, way over here, we have this, this resistance area formed here off that point comes into play here. And now we've have this big decline, which we just looked at on the industrials. And you can see one thing that I would like you, you intraday types, to keep in mind is identifying the internal structures. Here's an accumulation right here. Here's a reaccumulation. And here is a distribution. So when you look at the longer term charts, this is 2 hours, but if you look at a daily chart or 2 hour chart, you want to be able to look at this and say, I see a structure in here that needs to be analyzed, and I'm going to zoom in and I'm going to look more closely at this. Okay, so now just to show you this, this chart is from last month. And one of the things that we said at that time was that it looked like all roads led to on using intraday point and figure. This is a 30-minute point and figure, one box reversal, ATR 20 scaling. And this count, this accumulation count, which we just looked at on that 2 hour chart, counted up to 27, 87, 48, 28, 51, 56. And then this reaccumulation count actually grew a little bit more, but this count pretty much matched this count, but it became a little bigger. Now, where did we go? So here was the high, 27, 91, 47. And we were right down here when this was, we were over here, when we did this analysis and said, this is the count that we're getting from this structure and this structure. So again, looking at intraday, and so 2791, and our accumulation count gave us a minimum objective of 27, 87, 48. So we just got above the minimum objective. And so is this like remarkably valuable? This is hugely valuable, especially for intraday traders, because now you see an accumulation structure, you're able to evaluate that, and then you're able to get some idea, some estimation of how much fuel's in the tank for this swing trade, because this is a multi-day trade. Now, for many of you, you might want to look at smaller time frames, and that's perfectly okay. So that's a personal preference, but I'm just want to illustrate how you can put these elements together in a Wyckoff framework and be able to trade with them. Now, here is that distributional top that we just looked at on the S&P, and you can see here that this count of this distributional count, and there actually arguably is a little bigger one here, but we always start with a more conservative count, broke down out of that distribution area, rallied up underneath it, and then started to mark down in earnest. And we got right to the low box on the S&P with this distribution count. Okay, so this is from the most recent blog. So you can go back and look at this chart, you can look at this chart on the last blog. And this is an attempt to look at the FANG stocks together through a ETF, which the FANG stocks represent 4 FANG stocks represent 35% of the holdings in this internet index, of which there are many other stocks that are near FANG stocks in this index also. And so part of the reason I use this, because there's an opportunity to look at FANG, but the other part is we could look at intraday data, intraday charting, to be able to draw some conclusions about where we are. And so here we see that we're using reverse use of trend lines, and we always pick 2 early points in the uptrend, and here are the 2 points because I put boxes around those points on the chart. So you can see here, here, and then the intervening low we draw a parallel, and I always draw that as a dotted line. So the solid line is the 2-point trend line, and then the dotted line is the channel, the parallel channel that creates a channel. And so here we can see preliminary supply, buying climax, and then a big break into an automatic reaction. And we said this is a change of character. Now this is not, there isn't enough information here to be able to say that there's any distribution or even reaccumulation yet for a run up or down. But look at how well this intraday analysis was able to pick up a throw over of the trend channel. In and of itself, you can see that there's a gap in here. This looks climactic. So we have a throw over, which makes it overbought, and we have a climactic surge. All of these come together on this little bulge up out of the trend channel, and then you have an immediate failure back in again. And so this would at least tell us that we're having some kind of a reaction. And so you can see here for these FANG stocks that you've turned back in. Well, two things happen. We have another little smaller trend line here, which does a wonderful job. Look at all these points it picks up on the way up. Well, it just shatters that here and then just has a pause and then immediately starts to fall again and goes all the way to the bottom of the channel. So look at how well you can do intraday analysis on an ETF. You can do this on individual stocks and be able to pick up some really nice trading opportunities doing this. This is the point and figure chart. Let me go back. What I did is I took and built a count off of the intraday. This is 60-minute data. Now, this is a little trick that I want to tell you about, and that is the here you see I'm employing user-defined data. Now, what I did was I did ATR 20 scaling, and then I picked a number that was close to my ATR scaling. And so I got a box size of 1. And even though if it's normally over $100 is box size 2, but the scaling here is box size 1, because it's intraday data, I was able to get 2 counts. We'll look at the larger of the 2 counts counted beautifully up into the climactic surge above the channel. And so when we have all these elements come together, and here it is, all these elements are on this intraday data, we have great tools to be able to conduct swing trading, say, for instance. And I know many of you are maybe day traders, and these stock charts tools are ideal for even that. So they're wonderful for day traders and swing traders and good intraday tools. Now, I'm going to conclude with this case study, and this is the comp, NASDAQ comp. You're looking at a daily chart. So again, we want the larger context all the time in our intraday analysis. So we have a trend channel. Here is the reverse use, and you can see that we had 2 big bulges. This is the climax. So this huge bulge out of the channel, which is a climax, and look what happens. It goes out after being in it for a long time and exhausts itself, and then comes right back in with a huge automatic reaction, which we just looked at, which took out the bottom of the channel, and then that created the oversold condition, which allowed the next rally. But then after the next rally, it came right back into the channel again and then centered itself back in the channel. And so these channels are remarkably important. And the reason we draw them the way we do is because we want to not only see the touches and the stride of the uptrend, but we also want to see the bulges outside of the channel, because they usually are not sustainable. And so here we can see, we're going to evaluate 3 situations. Now here's a steeper channel here. Became overbought on 2 channels here. And we look at this and we say, you know, there's an intraday structure here that I want to zoom in and study. Throw over, overbought, I want to study this. And here in this uptrend, we have a nice accumulation structure. We actually had a nice accumulation structure here. We have one here, here, and here. Here's a stepping stone reaccumulation. This is more of an accumulation, reaccumulation distribution. And so let's just take a look at those. And so here is going back about 3 months. And you can see that we're drawing new trend lines on a 60-minute NASDAQ comp chart. And we have a trend line A prime and trend line B prime. And so here, this trend line it gets thrown over here and then stays above it, but rides on it and maintains this longer term stride, but it is above it. Notice the distributional characteristics. We have a buying climax, an automatic reaction. We can draw resistance and support off of these. Attempt to go up above the buying climax, which we would automatically, in Wyckoff structure, think of this as an overbought condition. And then it comes back in again. It cannot stay above resistance. Comes back in, touches 2 trend lines, and then rallies up into what we are analyzing as an upthrust after distribution with a gap in it. Now, the key to this is we want to determine. Now, some Wyckoffs will actually, if they're short sale minded, will actually short sell the test of that peak. So when you get a break, you get a test, they will short that. And some will wait for the surge down off of this, because this is showing that this was exhaustion. This is actually referred to as a sign of weakness. And so here's this exhaustion. It comes down, it breaks both trend lines, and then it just free falls.
Hey, Bruce.
Free falls on an hourly basis. Yes.
I was just going to ask before we move into the sound off, do you trade on an intraday basis as well as, I know when we've had you on before, it seems like you kind of hold your positions a little bit longer, but do you actually go from the daily chart down to an intraday chart to begin to build your positions, or do you do it mostly from the daily chart?
Yes, I do. And I love to look at the intraday data. I sometimes run out of time. If I don't have time to analyze all the charts, the intraday work suffers a little bit, doesn't get as much attention, but I love to look at it. And Tom, one of the main things that I do is I look at the intraday work to get my entry and exit strategies right.
Okay.
So I will do that. And so I want everybody to take some time to look at this reaccumulation structure. You can see this is gorgeous, has all the elements in it, and has a series of higher lows. Here you has a beautiful backup, and this we counted this, and sets up a big rally. And then here's a blow up of this area, and we will make sure that these charts are made available to you so you can have them and study them. So this is the same data, it's just zoomed in. And then the last thing, I don't know, Tom, how much time do we have?
Well, it is probably time to move into it, but this is definitely a topic I think that a lot of folks are interested in. So maybe the next time you come in, you can, try to zero in a little bit more on some of the detail.
Sure, and we can talk about how campaign traders can use intraday work. We talk about how intraday traders can tighten up their strategies. The last thing I want to show is just this chart. And so this chart is 30-minute data, 1 box reversal. These are the 3 areas that I just highlighted on the prior couple of charts. Box size, what I did is user defined, but it's based on ATR 20 scaling. I just rounded out using my own, I rounded out so that the scaling is cleaner. So it might have been 23.8, I just make it 25 because it makes the calculations cleaner. So here you can see accumulation. This accumulation here counts up to the reaccumulation. Look how beautiful that is. The reaccumulation counts up beautifully to the upthrust after distribution and counts to there, and that concludes this advance. And then here we have distribution that we can count, and so far the distribution has been fulfilled perfectly with the minimum objective, which is 74 1/4. So anyway, I leave it at that. But these are here's some tools for people that want to zoom into the tighter time frames. I love looking at this stuff. I am more of I'm more of a campaign trader, but I also will do intraday trading, call it swing trading, using these tools, and I will try to improve my entries on my campaign trades with these tools also. So I'll leave it at that.
Okay, awesome. Definitely an awesome illustration of how you can use the Wyckoff method on the intraday charts, and I think that's probably worth maybe going back over again at some point when we have you on, because we have a number of traders I think that are more short-term oriented, maybe even day traders. I guess you could even take this down to a minute-by-minute chart.
Oh, absolutely! You could do 5-minute vertical charts. You can do 5-minute point figure charts, and they're amazing. Yep. So I'd love to talk about that at some time.
All right. Well, we'll definitely keep that on the schedule for next time. We do want to move on, though, to Sound Off, and Bruce has agreed to stay with us. And so this is a segment that basically allows two of us to sound off against one another on a variety of stocks and or ETFs. And if you go past your 30 seconds that are allotted, your sound goes off. So that's where we came up with the name. It's we can sound off against one another, but then we only have 30 seconds to really make our argument, or our sound goes off. So I'm going to let Erin. Do you have a stock that maybe Bruce and I can sound off?
Absolutely.
Let me ask you guys, because I'm not an expert on how to get. I cannot see your screen yet.
Okay.
Oh, we'll get there.
Yep.
Oh, okay.
I'm going to get there.
Good. You're still on my screen.
Yep.
Okay. I don't want to sound off on something I can't see.
I understand that.
Because I'm known to sound off on things that I can't see. And I usually get it wrong.
Okay. Well, here we go. So on the emerging markets ETF, EEM, it's entered a death cross, apparently.
I'm still not seeing this.
Oh, I'm bringing it up. I'm bringing it up. There you go.
Okay. All right. We're there.
Okay. Yeah. So what do you think about that death cross that has just happened in emerging markets?
Who do you want to go first?
Tom, you go first. You got it up there. We'll give Bruce some time to think about it since he just was talking.
All right, sounds good. Well, first of all, I am not a fan of emerging markets when the dollar's on the rise. And so I think that's been the biggest problem here, is that the dollar began rising off the February lows, and EEM has been declining since. It broke down below a double bottom here at 45. I think it continues to go lower. I'm not a fan of the EEM.
All right. You did it in 30 seconds. How about you, Bruce? Ready?
Nasty looking downtrend, but I'm looking at the most recent price action. I see these gaps on the way down, which I know is because it's international, but there's a climax, and then there's another decline with a big down bar on lesser volume. I believe that EEM is done going down for a while, and I'd like to see whether it could make an accumulation.
All right. Excellent.
All right. Well, this time I will give you the stock. And before I pull it up and give you extra time, I do want to say that the financials have been the worst performing sector over the last 3 months, and banks have underperformed, especially large banks. So, Erin, I'm going to let you go first, and let me pull the chart up here for you. But what do you think of Bank of America?
All right. Okay, well, there's a few problems right off the bat that I don't like. We've got price action now below that 200-day EMA. Don't like to see that. Obviously, the PMO is still in decline. I don't even see good support at this point because we've already broken down below that May support area. So I'd be looking for support maybe, well, we're at about 2750, which is where we saw the November highs. So, but I'm not like.
All right, there she goes.
She got cut off.
Yes, she did, but I think she made her point. I don't think she's a fan here. What do you think, Bruce?
I'm not a fan. A couple of Wyckoff ideas here is around the 18th, a couple of weeks ago, there's ice forming. It has no lift. It's at support, and it breaks down. The resolution is breaking down. Tried to rally again a couple days ago and closed on the lows, and it's just drifting lower. Not a fan.
Okay.
All right. Excellent job. Okay, you guys ready?
Ready.
Okay, they're saying that, obviously with the dollar going up, That's a problem for a lot of those major corporations that we've talked about. And one of the ones that they're thinking might be a problem is Oracle. So what do you think of ORCL, Oracle?
I'll go ahead and take it, I guess. Oracle, I agree. I mean, I don't have my relative charts up here, but Oracle's had a couple big gap downs, heavy volume, and it has underperformed other software stocks. It has been a very, very poor performer relative to its peers in software. I don't see anything yet that I like here. I would have to see it get through gap resistance before I'd be interested. So I am going to say sell.
All right. Bruce, ready?
Ready. Yeah, it's certainly not acting well compared to other stocks in the segment, but it is trying to get back up into the trading range, and I'd like to see if it can rally up to the resistance area.
All
Yeah,
right.
you guys are quick.
We try to. All right, I've got another one. This time, Bruce, I'm going to make you go first.
Okay.
Okay, pipelines have been really strong over the last month. One of the best areas, and of course, energy's been strong. OKE, I'm not even going to pronounce it. I don't know if it's one OK or Oniok or whatever, but OKE has broken to an all-time high. And so my question is, given the strength in the space and given the strength breaking to an all-time high, what do you think of OKE? Would you buy it?
I own it. And so looking back February to April, it's a beautiful reaccumulation right there. It's classic. It's got great elements, beautiful uptrend, resolution to a new high. What's not to like?
All right, Erin, what do you think?
Okay, well, I'm not really thrilled with the PMO. That would give me a little bit of pause here. And we are sitting up, we're in this consolidation zone right now, and we haven't been able to really poke out above that. So, I mean, that would worry me a bit. And at this point, I think if you're holding it, I'd hold it. But I don't know that I'd get into it unless I saw a pretty nice break above that overhead resistance in the shorter term.
All right, sounds good. I know I didn't want to steal your time, but I was going to ask you if you owned it as well, because that was really going to be something.
Yeah, no, I don't.
Well, but I own it, but I'm making a note because now I'm worried.
Yeah.
All right.
We haven't had any discussions about any of these stocks, by the way. Just
no. Okay, so let's see. We have one of the managing directors at Baptist Group. Intel, it says, is at the top of his mind. He's bullish on it for the long term, expects upside into year end. What do you think?
I'll go ahead and go first. Intel to me is broken right now. I don't like the chips, particularly. I think that they are very weak. They had a terrible month of June. A lot of the trade talks, I think, are spooking a lot of these companies that do a lot of business over in China, Intel included. So I think you might see a move back up to the 20-day moving average, but I'm not sure you're going to get a whole lot more out of that. So until it clears the 20-day, I would avoid Intel.
All right, Bruce.
Great little trick here. Late April, there's this surge on volume. It's big red bar where it closes near the lows. That becomes new resistance. This is right at the end of April. And then it goes up, and this looks distributional to me, and it breaks down below that high of that late April peak, and then begins a downtrend. My little intraday thing looks troublesome.
Okay.
Hey.
Let's do one more. I've got one for you guys, and I looked at the mid caps, and they've been lagging both NASDAQ and small cap stocks, but the highest ranking scooter among the mid cap stocks is DXCM. And so it is challenging. You don't see it on this chart, but it is challenging its all-time high right now, or recently when it went up above 100. So, Bruce, I'll have you go first. What do you think here? Would you be a buyer of DXCM?
A little bit of a climax here in June. I'm determined to go over my time, and at least once. And a little bit of a climax here in early June. But there's no real increase in volume. That's a good sign, I think. So it stops the advance. I think it's just pausing, and I would expect another breakout.
All right.
All right.
Go over.
Excellent. Okay. I think this is a good example of why the PPO and PMO are different. Notice the PPO or the PMO is turning down beneath its signal line. That to me is a red flag. I would not touch this with a 10-foot pole. I just wouldn't do it, because when I see a a top below the signal line on the PMO, it's danger, danger, Will Robinson.
One question, because it sounds like obviously you're not a fan here, Erin, but I would say, and I've listened to you talk about the PMO quite a bit. Does it give you pause that the last time the PMO came down just below this 5 level, that's where we got the breakout? I mean, that's been, I guess, what you call oversold recent months. Does that?
No, it's really the direction of the PMO right now, and that top below the signal line is just dangerous. I don't like to get into stocks, first of all, where the PMO is turning, is moving downward, but wow, a top below the signal line, I just wouldn't.
Okay. Yeah, I mean, it's interesting because, this has been, obviously you can look at the scooter and see it's been one of the best performing stocks. Clearly it's in an uptrend, but the PMO, at least for in the near term, has topped, and even the PPO, both PMO and PPO look like you have negative divergences here on these highs. But we just wanted to clarify that one point.
Oh, and just the chat room, the ON, what was it, OEK? It's pronounced One Oak.
Okay, I think I thought I had heard that One Oak. That's why, or maybe I said One OK, but I had heard One Oak once before. So thanks for clarifying that one for me.
Mm-hmm.
Okay,
well, that was really fun. Thank you.
Yeah, this was fun, but you didn't go over your time, Bruce.
I know. I'll do better next time.
You never got cut off. Anyhow, those were the stocks that we went over. It was fun. Erin battled Bruce. I battled Bruce. I think Bruce probably won both times.
I'm exhausted.
All right. Well, I'm exhausted too, but we're going to go into the 10 and 10 in just a minute. But before we do that, let's talk about that poll, because we did cast a poll out there for everyone to answer. And, you can kind of see what we're doing with the charts and moving things around, and how Bruce and Erin and I all were talking about this based on different indicators we put up on these charts. But the poll was asking you for areas of stock charts. What do you use at stock charts on a regular basis? And charts and chart lists. This was, Erin, you and I talked about this before the show. This is what I thought would be number one, was chart and chart lists. And of course, our director said, well, it better be Stock Charts TV. But it wasn't. Charts and chart lists won out. And I think the key word here is regularly.
Yes.
So there could be those who come into stock charts periodically, where charts and chart lists are pretty hard to come into stock charts and not use the charts and chart lists.
Absolutely.
But anyway.
I'm surprised blogs aren't number one.
Actually, I'm surprised it's as high as it is. I really am.
It's a very good sign, actually. I think that's wonderful.
Yeah, and I think, too, those of you who didn't answer annotations or scans, or especially Chart School, I think you're missing out on some pretty cool stuff at stock charts.
I couldn't agree more. I love annotations.
Absolutely.
Yep. Love them.
All right. Well, let's move on now. We're going to do the 10 and 10. Are you ready, Erin?
Yeah, why don't you go ahead? I'm not going to share the screen, of course, since we were doing that right up until 10 and 10. I did get all the stocks in, but go ahead and start us with JYNT. And most popular in the chat room is currently, go vote, because if you don't want this one, is Adobe. Currently is winning. So,
okay. Yeah. All right. Well, let's take a look at what is it? The Joint Corp, JYNT. I've already annotated it. So I wanted to, those of you who maybe aren't familiar with technical analysis, this is kind of the basics of technical analysis, where you kind of have this stair-stepping approach. I know, Arthur talks about this a lot, but when you break resistance, that then becomes support. Once you establish a high, that becomes resistance. So it's almost like you're on this stair-stepping process, or I like to refer to it like as elevators moving up in a building, where, you establish the first floor, come back and test the first floor, and then you get on the elevator and you go through the first floor and go up to the second floor. And then the ceiling on the first floor becomes your floor on the second floor. So if you can kind of use that analogy. But here's a beautiful move up in JYNT. We pulled back. We tested price support. That was the prior resistance area that we couldn't break through. We finally did. And then notice these pullbacks come right down to this level, and then we start moving higher. We break out. Where do we come back to? Essentially, that price support. So I think we're trapped right now on JYNT between about $8 to the downside and maybe about $8.85, $8.90 to the upside. So I'd watch this area, but I think it's a nice chart that's been moving higher, and volume is picking up again today relative to what we've seen. So if we get a breakout above $8.85, $8.90, I think that would be bullish for JYNT.
All right. And the most popular, and it held out, Adobe is our number one. So ADBE.
Okay, Adobe, well, unlike what I was showing or talking about earlier with Oracle, Adobe's been a great performer in the software space. So when I annotate and we talk about, what you really want to look for in a stock, and just about everyone who comes on the show with us, almost every guest talks about relative strength and how important it is if you're going to outperform the market to be in stocks that are simply outperformers. And if you look, you've got Adobe. Here's the software space, which has been going up. You've got Adobe relative to the software space going higher, Adobe relative to the S&P going higher, and software relative to the S&P going higher. These are the types of charts that I think you should be interested in. Now, that doesn't mean you just run out and buy it. You look for key areas of support. But I think on Adobe, I think we're not too far from a good area of support. We had multiple tops just above 230. We came down, we held that area, we got back into the 230s recently. I'd be a buyer of Adobe down in the 230, 235 range, looking for another trip back to 260.
All right. Our next one is going to be Costco, please, as the person asked. COS.
Costco. All right. Not that it really matters, but I do like shopping at Costco.
Oh, I do, with Instacart, because I don't like to have to go.
Well, you can see Costco relative to the broadline retailers has been down, but otherwise, this is another one that's pretty strong. You're in a strong group. I think Costco is strengthening. So when you look down here, you can see that it's kind of going along for the ride the past 2 or 3 months. It's slowed down that relative downtrend that it was in. So while it was kind of fading here back in February, March, April, the rest of the group was going higher, and that's what resulted in this downtrend. I would really like Costco if it were to break back up on a relative basis versus the broadline retailers above this 0.125 area right in here. So if I was going to annotate, that would be one thing that I would just make a note of. And that would be, again, that relative level right there. I mean, because if you look, you see that we had some pretty good relative support at that area. We went back below it, came back up on a reaction high. That's what I would look for. I think the stock looks pretty good, and I like it on the rising 20-day test. But on a relative basis, if you want to outperform, you really want to start to see a little bit of outperformance relative to its peers.
Okay. The next one I thought was very cute as far as symbol, ABCD, Cambium Learning Group.
All right, ABCD. I can't use that anymore as my sample, or example. I always say, well, if you look at ABCD company, I can't do that anymore. I didn't realize this one was out there. Anyhow, I do like the recent surge. Volumes picked up a little bit, so we've moved higher. I think the overhead resistance is firmly established by that big red candle. This is similar, I think, to what Bruce was talking about earlier with one of the charts that he was looking at. When you see a big candle on very heavy volume like this, and you pull back, as we move back higher, I think that's going to be a critical area to watch to the upside. So if I was in the stock, I like what it's doing. I like the fact that momentum's picking up. But as we get closer and closer to 1350, 1360, for me, I'd ring the register and see if you can get through.
Okay. Another popular one that we haven't looked at in a while as far as the 10 and 10 is AT&T.
All right, AT&T, yeah, this is one I remember talking about. I just didn't like it. I didn't like the price resistance. I didn't like the gap resistance. I know it was strengthening there for a bit, but I was struggling to like the AT&T chart here too much. That was where we had gap down from, and check out the volume on this gap down. We took out prior support. So this is the area of overhead resistance that I think we have on AT&T. If there's a good thing, it's that so far it's been holding the support level. But I think for me, I would use the trading range from 31.40 up to about 35.20. And we're closer to the bottom of the area, so perhaps we have a little bit more upside in the near term. But I am not a fan of the overall downtrend here in AT&T, so I would avoid it.
All right, let's see. This is a fund, the Dow Jones Internet Index Fund, FDN.
All right, I think this is one maybe that Bruce was just looking at a little bit earlier, but I think it's a great group of stocks. The Internet Index is always, typically anyway, does lead the market, and I think the market's going higher. So I expect that this pullback is an opportunity here. We did have a reversing candle that's a bearish engulfing candle right at the top, maybe signaled a little bit of short-term weakness. I think we're simply consolidating. You can see that we were very overbought the first half of June. We've pulled back. We've relieved those overbought conditions. And I think as long as it holds above, say, about 135, actually, I'll go maybe just a little bit lower. Let's call it about 133 would be one support. There's another right here where it came down recently. I think this 133 to 135 and a half area is important for this group to the downside. I'd like to see that continue to hold. That's also where that 50-day moving average comes in. I'd be looking for another pushback up to the 145, 145 and a half area.
Okay. For our Canadian friends, the National Bank of Canada, NA.TO.
Okay, well, a lot of overhead resistance that we're still trying to deal with. I'm going to go out just a little bit further. Let's go a year instead of 6 months here. Yeah, I mean, I think we've got a pretty nice pattern, though. I mean, I see a nice inverse head and shoulder off of the uptrend. So let's go ahead and annotate this. First, we have the uptrend right there. And then I'll just draw in a line. It goes right about there. Here would be your left shoulder, neckline, lower low puts in the head, right side of the neckline, right shoulder, inverse right shoulder. And now we're just kind of hesitating. What I'd really like to see clearly is a heavy volume break above 64. I think that would measure, at least temporarily, short term, from this neckline down to the head, which is $5. I think that would measure up to about the 68, 69 area. So that's what I'd be looking for if we get the breakout. Right now, we're up against resistance. We don't have the volume to support this move, but a breakout above 64 with heavy volume is what you should be looking for.
Okay. We've had a lot of requests for mining stocks. I decided to pick Pretium Resources, PVG.
All right. Well, I know that Greg Schnell and I have had a little debate about some of the mining stocks. He's a fan. I'm not. I don't like the group mostly because I just expect the dollar to continue rising. I think that's going to be a pretty formidable headwind. I think it's going to be hard to outperform the S&P 500 with stocks that would underperform with a rising dollar. So that's the main reason why I would avoid most of these mining stocks. But here is a key area of resistance on this move to the upside. I think 830 becomes very important. If you could somehow manage to get through 830 and get some volume, then I think the next level would be another dollar higher up to about 930. But look at all the volume that came in on this huge sell-off, all the distribution here. And even on this gap up, you can see we quickly went right back down and filled that gap support. I'm just not sure. I don't like the group. I don't like this space, again, because of the dollar and what I'm expecting out of the dollar. But these are the two key overhead price resistance levels to watch.
Okay, how about a gambling stock, Red Rock Resorts, RRR?
RRR. Well, this one's doing a lot better than many of the gambling stocks, that's for sure, but it does still need to break out above that 35 area with some gusto. We haven't seen that. We've seen many tests now right up here just above 35. Let's call it about 35 and a quarter or so. If we can get a breakout and see the kind of volume that we saw back in early May or even back in February and March to accompany this to the upside, I think that would be very bullish. Until then, I would actually be a seller as we get up close to the 35 level, simply because that's what seems to happen every time we get there. I'd have to see that breakout first. So I like the stock, but I need to see this breakout above 35 and a quarter. It is doing very well, though, relative to its peers.
Okay. And our final one is Pilgrim's Pride, our only consumer staples request, PPC.
Yeah, again, this is one that, I'm just not a big fan of consumer staples. Even though June was a pretty good month for consumer staples, you can see this stock really did not perform well. What I would be looking for me to get a little bit more interested here is as we've moved back down, as we've kept coming down here, you can see that the PPO has started to turn back to the upside. Now, what this can result in is simply an unwinding of this PPO back to the zero line, maybe a 50-day test, and then a turn back to the downside as the weakness continues. This stock has lost a lot of ground, though, almost 50% since the beginning of December. That's a lot. So at some point, if we could get back through this 21.25 area, I think that would begin to show a little bit more of a bullishness. So I'd look for that. Until I got a break above 21.25 with some heavy volume, I would avoid it, because again, it's in a bad sector. I'm trying to outperform the S&P 500, and it's hard to do it with a stock that is continually lagging.
All right. And that concludes the 10 and 10. Here are the symbols that we went over. I will get those up into the Market Watchers Live chart list, and you can find that if you just go to the blogs page, click on the Market Watchers Live blog, and you'll see the link right there at the top. All right, we'll be right back with the final market update after this message.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
All right, time for our final market update. Let's see what's been going on in the market since we started our program. As you can see, we had, these gaps up on the large caps, took a deep move downward, but still managed to stay above the close from yesterday. So we've been in the positive all day, and now we're making a rebound, starting to hit some new intraday highs for the day. NASDAQ is making new intraday highs as well. Mid caps not quite there to test the intraday highs, but still moving steadily higher. And Russell 2000 similar, moving slowly higher throughout the day right here. We didn't even have that pullback that was necessary like we saw in the large caps. We've got TSX, it's currently down, but moved up and might be forming an intraday flag. So that could be interesting. We might be able to see the TSX get into positive territory since we haven't seen that yet today. The treasury yields are mostly unchanged, currently reading 2.836. And we've got TLT, had a nice rise, but it is starting to pull back right now. Took about half of its gains back. We can see UUP gap down, moving sideways. Nothing too exciting there. Gold pretty much moved up on the day. It's kind of consolidating right now, but it is up 41 cents, GLD 119.06. USO oil is down currently, started the day in positive territory, but has moved back down, tested the low from July 3rd, and it does seem to be moving back up at that point. The VIX reading right around 15. We're starting to see a bit of a pullback here on the VIX. We did get a rise all the way up to about 16.25 for the VIX, but currently reading right at 15. And that concludes our final market update. Tom, did you want to add a chart or two there?
Yeah, I want to just take a quick look at the semiconductors. And I talked about these earlier, how June was really rough. You can see that the high that was established in the first week of June was up well over 3,700. We went all the way back down to about 3,340 or so before we're starting now maybe to try to push back to the upside. But that was about a 400-point drop, more than 10% in about 3 or 4 weeks. And it shows how quickly these semiconductors can move in both directions. But I did point out this trend line. I think we want to be careful here. You've got the red arrow pointing to the overhead moving averages. You've also got gap resistance, price resistance coming in at about 3,500, which is exactly where that 20-day is. So I think semiconductors, while they look really good today, up a couple percent, I do think that we've got some overhead resistance at 3,500 and key trend line support and price support around 3,340. I think we're just squeezing in this range, but this is going to be a group really worth watching as we move throughout July.
All right, excellent. So let's go ahead. We're going to start with our final segment, technical scans. And I'm going to bring this up first. So this is my homepage, of course, the member dashboard. And I have a group of scans that I use regularly. And today I thought I would look at my 5-day EMA crossover PMO scan, where the 50 is above the 200-day EMA. That means that it is currently in a bullish configuration. Those are the kind of stocks I want to look at. I generally don't want to look at the ones where we're set up in a, a bear market setup where the 50 is below the 200-day EMA. So let's go ahead, and here is the scan itself. I can print this up and have it ready in the Market Watchers Live recap today. So I will put that in there for you, and you can just copy and paste it. Very similar to my regular PMO scan, where I go for a PMO that hasn't had its positive crossover yet, but has been rising for 2 to 3 days. So that's what we were looking for at this point. So I'm going to run the scan. I came up with like about 6. The last time I ran it, we'll just have to see what it comes up with right now intraday. Yep, we still have 6. I use a chart list that I call, and this I got from Greg Schnell. I saw him do this years ago, and I just thought it was a brilliant idea. But he has a chart list called Scan Dump. Basically, whenever I do a scan, I want a place to just throw those charts in there. I know it's completely temporary. If I want to use any of those charts later, I just remember to, add it to one of my other chart lists. But I think it's really, really helpful. If you don't have this set up, I think it just works great. So now I have it in a new chart list, the Scan Dump. And when I do my scan, I want to look at all of these, but I don't like to look at them at first chart by chart. I like to go with the candle glance. I have my own candle glance set up, my own chart style. And all you have to do is, when you're in your charting workbench, just go ahead and set it up the way you would like your candle glance to look. You can do your borders, add EMAs, whatever it is, your favorite indicator, and then just save that chart style as candle glance, just all one word. And there you go. And then you will have, in fact, it tells you about that right here, and you can learn more on how to do that if I went too fast there. So these were the 6 stocks that we came up with. And just right out the gate, I want to look at my PMO setups. And then from there, I want to look at possible chart patterns or, possible breakouts, things that look interesting to me, that maybe we don't have the actual breakout just yet, but it's setting up nicely. So the first thing I'm going to just say is with Verax images, I'm not going to look at that. It's just, I can tell it's thinly traded the way, just based on how it's looking at this point. So I'm just going to skip that one. I didn't care for that one anyway. The one I like just out the gate right now is OXLC. And again, it is a lower price stock. So watch your position size, because that's you're putting a lot up there for risk with possible volatile changes. But I liked this because I had this nice slow move in a low for the PMO, and it's just getting ready here to have a positive crossover. Notice that the OBV, I didn't see that, of course, on Candle Glance, but I'm looking at it right now, and we can see these tops back from June, this top and that, they're rising. And that tells me that there's, the volume is starting to pick up here, and it might be an interesting play. So looking right here, you can see that in the very short term, we've managed to pop up above that 10, looks like 55 area. We pulled back though. I see a possible really short-term flag setting up here. I think it's great that the 20 managed to miss that accident of falling below its 50-day EMA. That would be dangerous. I don't like to see that on a stock that I might be interested in getting into. Instead, we see the 20 hit, and now it's moving back up. And with that flag set up, I'm going to go ahead and let's annotate this to get some ideas of possible support and resistance. And actually, I think I'm going to take this to a shorter chart. And when I do that, I like to make my OHLC bars thicker. All right, so what are we looking at here? Let's go ahead and annotate. And the first thing I'm going to go to is that trusty support and resistance line that's already set up for us here. So of course, the first thing I want to look at is possible support areas. I think this is a pretty good one, right just above 1025. And where is the previous highs here in this zone since, the beginning of June? And so I see this consolidation zone, and actually, it started even back here at the end of May. We had that little pop above, but it didn't hold that, hit the 20-day and fell below it. But right now you can see we're trading above that 20 on that pop that gave us a possible flagpole. We're sitting right on that resistance area. Given what's going on with PMO, I would probably not have a problem jumping into something like this because I would be looking for that breakout to the top side. But I would set, and again, with a very low price stock like this, I would tighten up that stop. I probably wouldn't let it get too much below that 1050 level. If you really want to take some risk, I suppose you could drop it back down to that 1042 level where we saw those tops back earlier. But I think what you're looking for is at least a move up to what we're seeing here on those tops that we saw earlier. So I would be looking for at least a move up to that 1075 area. And like I said, you can set a tight stop, and that could be a really interesting play. All right, so let's look at what other ones we had in here. And I want to go back to the candle glance because I want to look at, even though I only have 6, I want to just give you guys examples of how, when you have 40, what to look for. What are the things that should come out and just, slap you in the face if there's something good there. This one, I'm going to say that I'm not liking the setup just right away because you can see already intraday, we're getting a top below that signal line. I do think it's interesting though, we got our bottom right above the 0 line, and that usually says that there is internal strength. We have a decent scooter, and you can see the OBV is starting to rise. So I might forgive it, the fact that it's trying to turn down below its signal line. If we can get a close that's closer to what we had near the open, that might be a better play. So I'm going to go ahead and annotate this one too, just for everybody to see what I like to do. So I'm looking back here at this top. That was possible area of support. I'm going to raise it a little because you can see it with support here, resistance back here, support in the shorter term back in April. But this is the problem that I have. We could see these tops, and we have yet to get above it, and in fact have pulled back after an unsuccessful test, and both days on Tuesday and today as well, we're seeing an inability to pop above that overhead resistance. So while I might consider this on the watch list, we are getting a pullback, which I usually like to look for, but we're getting that pullback after not making it above resistance. And so I think we should heed the fact that we do have a PMO that is trying to turn down below its signal line. All right, so let's look at a good one besides the one we did earlier. All right, so this one looks like a quote unquote good one. And I say that because, again, you've got a nice swing on the PMO. Over here, we've got, you can see we got the PMO buy signal, but it looks like it wants to whipsaw already back down. Didn't make it above that overhead resistance. So I would just, not consider that one right off the bat. So this one I thought was interesting, like I said, because I could see a breakout from a rounded bottom. This could be an interesting one. Let's go ahead and annotate it, and then I'll give it back to you, Tom. I think you had a predefined scan that you were interested in looking at. All right, so this has been your area of travel. I guess I could see a possible head and shoulders setting up here, which could be a problem. But when I see this setup on the PMO, it is starting to decelerate. So again, it might be something to hold off on a little bit, but you can see that breakout above those earlier tops on the rounded bottom. So I think you still have a pretty good shot here of moving up to at least you know, the overhead resistance on these two tops right here and here, off of this base here at that at the support level we're looking at currently in that very short-term time frame. You can see it better in the thumbnail. And again, the PMO is starting to turn upward. So we're sitting right on that support line. You know, you could set that stop just below, make it a tight one, you know, right there at even the 5-day EMA or the 20-day EMA, and then look for those moves up to that 1925 and 1950 areas, possibly higher. So those were the ones that I thought were especially interesting from the candle glances. And let's see if the other ones, okay, so yeah, I would turn that one down because we've got the signal PMO going below the signal line. Trinity Industries, this one could be interesting. We do see a flag going on here, but we have a failed test of overhead resistance at both of these tops that we saw end of May and mid-June. So I would be a little worried about that. But again, I think these are the kind of stocks you could set tighter stops, but have some pretty nice targets set up here. So this is a good setup as far as the PMO, might be worth the watch list. You know, we're getting that pullback toward the 20. And I think, like I said, you could set a pretty tight stop here, and then your upside target is way up here at 37. So those were the ones I found interesting through my technical scans. Did you have any predefined that you wanted to look at, Tom, or?
Yeah, I'm going to go through and pull up a couple of predefined. First, I just want to make sure everyone's aware. If you are on the member dashboard, you can see I'm looking down and I don't have any of those predefined scans. You got to make sure over here on the gear that you have that set up. So here I didn't have the scans alerts checked. So
good point.
That just make sure that now you're going to see it down here. Here are my scans, my predefined scans. So make sure that is available. Now, what I've done, all you have to do is click on this and it brings up a huge list of predefined scans. One thing you can do is click on, say, NASDAQ 52-week highs. And if you click on any of these scans, you'll see this link. Click here to edit the scan. This will start to give you some ideas on how you write these scans, or if you want to change something like the moving average, the number of shares traded, the volume. You could go from 40,000 to 400,000 if you want, and you could redo the scan based on that. Just wanted to point that out, but I'm going to stick with two scans here real quick. One is the hammer. I really enjoy the candlesticks, so I like to see hammers because a lot of times off of downtrends or maybe at major support, hammers could produce some trading opportunities. This 7 here, this is under the NASDAQ column, so I'm going to click on this to bring up the 7 NASDAQ stocks that are on this list, and then you can sort them by whatever you want. But the one that I want to zero in on here is Tesla. You can see a lot of shares traded, 13.8 million, and if I pull up Tesla, you'll see that this is potentially, let's see how we finish today. But if you recall, a couple of days ago, I think it was Elon Musk said that their popular car, they were trying to produce 5,000 cars in a week. And they said they finally achieved it the last week of June. Remember, and they gapped up. The stock was at 365. Well, that was Monday. Here we are on Thursday, and the stock went down below 300. But it could be putting in a reversing candle off of a major downtrend here. And I say 310 being a very big level, because if we go through and we annotate here, you can see 310 was great support. And then once we broke below it on very heavy volume, look at all these trips to 310 before we finally went above it on heavy volume. Now here we are potentially putting in a hammer on 310. This is a stock I'm going to be really interested in personally at the end of the day to see whether or not we can hold. If it breaks to a new high today, earlier the high was 314.39. I think that would be a buy signal on the stock, or if it just closes over 310. But that is certainly a stock. And I quickly came up with this, not because I was stalking it, because I just used a predefined scan that's available at Stock Chart. So that's one. Another predefined scan for me would be something like, I like these hollow red candles. So let's do the hollow red candle for the NASDAQ, 42 of them. And I'll do it by scooter. And there was one that kind of stood out to me, if I can find it. Yeah, this one right here. It's only got a scooter of 10, so I'm not expecting this to be a stock that's been doing particularly well. But when I pulled it up, I did notice that off of a high of 14.5 back in March, it has been slowly moving lower. Volume hasn't been very heavy, but notice today the volume is picking up, and we've got a red hollow candle off of a gap down, off of a long downtrend. That wouldn't surprise me if we saw a bottom going in an MNOV. Now, this is a small healthcare company, so it's, you want to be careful. I don't want to encourage everyone just to go rushing out and buying MNOV because of the risk involved. But I just want you more to pay attention to the predefined scans that are available at Stock Charts. And if we go back and we look, say, at a weekly chart, you can see that this is a stock that in the first 2 months of the year went from about 6.5 to over 14 on some pretty good volume. And now it's made its way from 14 back down to 7 on lesser volume. So I think the weekly chart here looks interesting. And then, of course, throw in that hollow candle on the daily. And this is one maybe to keep an eye on. So, all right, let's go ahead and summarize what we looked at here on the technical scans. Erin gave you several stocks looking at a PMO scan. And then I just quickly showed you how you can use the predefined scan at Stock Charts to zero in on some potential trading candidates. Okay, well, it is the end of another show. Bruce, certainly good having you with us again today. Can't wait to have you back.
Thank you. Had a blast.
What do you think of the market?
I'm bullish. I do believe that the market suffered a big trauma December, January, and with that big decline in February. And so it's just trying to reaccumulate itself. I have some really nice point and figure counts that go higher. I think I even profiled a couple of them last month. And so I'm generally bullish. It's all just about getting the timing right. And I do think that we're starting to squeeze the volatility out of this market.
Yeah, and that's always a positive because that's typically what you see with a bull market is volatility being squeezed out. And then all of a sudden these huge drops and things, they start to narrow, and then the market just slowly starts making its way higher.
And the huge drops are a fake out.
Yes, and we rally off of them. Yep.
Traps.
Yeah, Erin, what do you think? I mean, looking at the PMO and all your different time frames and decision point, I mean, are you long-term bullish or bearish?
At this point, I would say I'm long-term bullish because the rising trends are still completely intact and in play. Short term, I came into this week bullish. I feel pretty good about that. We'll just have to see about next week. I want to look at my sentiment charts, which I'll show everybody tomorrow, check my, indicators, but overall, I'm feeling pretty bullish about things. Except maybe in the short term, I think there might be a little bit of hiccups going on.
Yeah, I remain pretty bullish. I think the dollar is going to break back out again, and I think so. What's been lifting the Russell 2000 in the first 6 months of the year, I think is going to continue into the second 6 months of the year. I think that all the major indices, I believe, are going to go higher. I think looking at some of the long-term charts on even the international indices, I think they all point to key support holding and trend lines that have been moving higher. So anyhow, that's a discussion, I guess, for another day. But I did want to thank you again, Bruce, for joining us. It was a pleasure having you on here, my friend.
You're wonderful hosts, and it's just a blast to be here with you.
Oh, thank you.
Yep, always. Thanks, Erin, and thanks to everybody out there. I hope everybody enjoyed a great 4th. We do want to thank you for being with us today. We'd love to get your feedback. So if you can give us some feedback on what you think of Market Watchers Live, we would really appreciate that. All you have to do is complete that survey. And as a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. We'll see you back here tomorrow. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.